Hi everyone, so welcome to Investing for Value. So today I want to talk about Spirit Airlines. Their share price has been doing pretty well recently, and I've got a shareholder presentation that kind of just really impressed me as well. That's why I really wanted to talk about this company. And also I just recently took a shareholding in this company, and I just want to talk about the points that kind of stuck out for me anyway. So currently the share price is at $13.90, giving a valuation of $1.23 billion. And as you can see, in the middle of May, it bottomed out at around $8, and if you're pretty lucky around this area, you've done very well. Recently, the share price is close to $14, so you would have made around, more than 50% of your money if you brought it around the lows. And even if you're not buying around the lows, around this kind of point is still not too bad. And I'm just going to point out the reasons in their shareholder presentation. So they point out they're one of the lower cost buyers, and they've got strong liquidity of $1.1 billion, and they also have 650 million in intangible assets which can serve as collateral for additional financing. The average daily burn rate was $4 million a day, which isn't too high in the scheme of things. And I've also talked that it's actually improved in the second half of 2020. So I can kind of see these guys lasting for quite a while because their burn rate isn't as high as other airlines. And I've also got a very strong network when it comes to flying. They've got 77 destinations. They pretty much fly around the whole of the US. And as they say, they operate a single fleet, which reduces certain costs because you don't have to train certain pilots to more or less fly different aircrafts. So they've kind of got an advantage by operating a very simple model. And then when we come to look at the EBITDA margins, you can see Spirit kind of just outpaces everyone else, all the large airlines when it comes to the EBITDA margins. When it comes to aircraft, they're second in terms of the margins, and that kind of is something that for me is a very strong advantage when you have better margins, because it means you just don't have to do as much business to be profitable or charge as high pricing. And you can kind of see in terms of revenue in the last 10 or so years, from 2010 they went from 781 million in revenue to 3.8 billion in revenue. So this is a company that has a pretty impressive growth rate and also pretty impressive profitability as well. In 2010, profitability was 43 million, and in 2019 it was 349 million. So this is a company that's come quite a long way. So this company knows how to grow and how to make good profits. So there's also this part down here where they point out their strong liquidity, where on a current uh, financing that they have, they could actually last for 14 months. So if you can last for 14 months, that's actually a very strong sign, and by 14 months I think things would have been going back to normal. If they don't, they actually can get some extra loans from the CARES Act, and that would actually make them last to 20 months. So this is not an airline that's in too much danger of going out of business, and basically since they operate such a simple model, they can actually recover pretty quickly. And as it's mentioned that they're a low cost producer and their margins are better, so we can look here, and Spirit is by far the lower cost when it comes to all the major airlines. And so like if you look at Southwest, which I did like a video on in terms of 4 large airlines previously, and Southwest had some of the best margins. We're looking at Spirit here, and they've got even better margins than Southwest, which is pretty impressive. And then you look at Delta, United Airlines, American Airlines, their cost is pretty high in terms of this. So when it comes to Spirit Airlines, I think in this current climate, they have a pretty strong advantage, especially being in the low cost category. And also since we're looking at more of a recession slash depression type of scenario where no one wants to spend too much on flights, so I think Spirit's got an advantage, and people are going to be demanding more of their flights over more premium flights, say like Southwest or something like that. So that's kind of the stuff that stuck out for me in terms of that. And if we look at last year's net income, it was about 335 million, which is pretty good. But obviously this year is not as great because in the first quarter they already lost about $27 million, and it's likely in the following quarters they will continue to lose a bit of money. But as I already mentioned, that they can last for 14 months if they need to on their current liquidity, and if they need to, they can even extend it to 20 months. So this is a kind of situation where I think they're in the best advantage when it comes to large airlines. They're not as large as the big four, but they're still fairly large at $1 billion in valuation. So that's kind of why I thought this is an airline that I would personally like to invest in. And I certainly took a shareholding recently. Not at the really great pricing here, but around here. And I think it has a good possibility that this share price could go to $20, even $25 in the short term. But that's just me thinking in terms of the valuation, in terms of the economy opening up. Of course, things might not end up that way. The share price has moved a lot, so expect some profit taking, of course. If you have any questions, post below, or I would always be interested to hear your perspective. Until then, good luck investing, everyone.